Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. And what are the chances of XRP becoming a Tier 1 asset? Some say XRP will be a Tier 1 asset because it will offer instant global liquidity, neutrality, transparency, and institutional grade trust, making it a high quality collateral and a fundamental settlement asset in the new financial system. And some breaking news, 9 XRP Spot ETFs are now listed on the DTCC, signaling readiness ahead of a possible launch this month. The listed ETFs are Bitwise, Canary, Volatility Shares, ETF Opportunities, Coin Shares, Amplify XRP, ETF Opportunities, T-Rex, Osprey XRP, Volatility Shares 2x XRP ETF, and Franklin XRP ETF. This is usually one of the last steps that happens before ETFs go live. And like I said, ISO 222 is coming up in 12 days. They need liquidity in XRP in order to use it as a bridge asset. You remember a while ago when Robinhood bought Bitstamp, and I believe the deal closed in June of 2025? Citadel partnered with Robinhood. Robinhood buys Bitstamp. Bitstamp is tokenizing derivatives on the XRP ledger. Citadel and Fortress raised $500 million for a $40 billion Ripple valuation. Ray Charles can see where this is going, my friends. Lock and load.
A business or an institutional investor, they also want access to the things we offer. You know, they want 24-hour access to the equity markets and want industry-leading margin rates, a great customer experience. So over time, I do think you'll see us branching more out into serving other types of customers, not just retail, but also businesses and institutions. And, you know, to that end, we announced an acquisition of Bitstamp, a global crypto exchange. One of the things that's very attractive about that business is that it's not just international, but also institutional. It gets us access to an entirely new customer base that we're not directly serving today. I think we can do more and more of that over the next 10 years.
We are launching our own derivatives exchange in the next few months. So that's something we are most excited about and really hope to cooperate closely with Ripple there as well. In final stage of integration of really some top 30 commercial banks globally on Bitstamp as a service. So these commercial banks will offer crypto through Bitstamp. So that's definitely something we are very proud of.
The things with tokenizing the derivatives market is that's estimated at like $1 quadrillion. That is massive. Most people don't even realize how much money that is. Any company or any blockchain that's tokenizing the derivatives market on their ledger, if they only capture like 1% of 1 quadrillion, that's still like $10 trillion. That's still massive. Now jack it up to 5% or even 10%. They're going to soak up a lot of this market. They're not going to take it all. Like I said, it's not going to be a one winner take all system here. You only need a little slice of that big ass pie. And this is pretty wild. We're already over 2 billion now held across 13 XRP Treasury companies. The XRP institutional ecosystem is expanding fast. And here's the full list. Evernorth, Trident, Weebus, Vivo Power, Wellgistics, Hyperscale, Everything Blockchain, Gumi, Nature's Miracle, Worksport, BC Bud, Digital Communications, and Amazing AI. They all combined to over 2 billion XRP held in Treasury. And BlackRock's head of crypto, Robbie Mitchnick, knows what's coming. And I believe he was an ex-Ripple executive from back in like 2017, I believe. All I'm saying is make sure you pick wisely.
Well, I think my advice is more for the people coming in how they approach the space. I think it's very important to be discerning and to be very particular about which assets one is going to hold, right? There's a reason Bitcoin is still roughly 65% of the market cap of the space because it has very clear product market fit and investor narrative and a big addressable market as this digital gold-like asset. There's a reason there's consolidation in a lot of the rest of the market cap in a few top assets, which is those are the handful that have really proven themselves and developed some degree of product market fit and economic utility. One has to be very wary going far down the table. There's hundreds of thousands of crypto assets out there today. The vast majority of those are or will be totally worthless. And so investors have to be careful around that. And they also, I think, should be wary around trading on a short-term basis. Certainly short-term levered basis is a tough game a lot of times in the crypto space. And I think the people who've done the best in this space have taken a much more long-term fundamental view and understood that you have to be patient and you have to understand that there's volatility in the space and there will be cycles.
He is correct. There will be cycles, but I honestly believe That 4-year cycle is done and over with. I don't believe we'll be repeating that 4-year cycle again. Once mass adoption has taken place and we're actually using these cryptocurrencies, these blockchains for their specific purposes, there ain't going to be no 4-year cycle anymore. You know, it's pretty funny to see the likes of like Jamie Dimon or Larry Fink or these big banking executives that were always talking down about blockchain and stable coins and cryptocurrencies. You know, they're only doing that because they were going to get rolled over. They didn't want to get beat down and put out of business. And we all know they're going to lie to us through their teeth and do the exact opposite of what they're saying. Anyways, let's hear what Jamie Dimon has to say.
Let's tackle something that's been a little bit interesting for a couple of years. So you've been famously skeptical about Bitcoin. And but I think you've come off of that a little bit over the last 6 months or 12 months. And I know JP Morgan uses a lot of blockchain token and a lot of innovation into your business and your approach. How do you balance the risk of investing in technologies that are going to drive innovation and future growth? And what are your thoughts on stablecoin and Bitcoin? That's a loaded
so
question.
this is a great way to deal with an issue or something like that. Whenever we meet as a business unit, so it could be a small business unit like consumer branches or a big one like global investment banking, on the table and on the agenda is what are you doing in tech, AI, et cetera. That is always on the agenda. And I do it differently than other people. I don't say what's in your budget. I always say, are you doing everything you need to do to win in the future, period. And I don't care what the budget says. I don't care what it is. And you may walk in and say, you know what, I was just over somewhere. I really need to do X. My view is you better be doing X. You know, so to me, the budget is a roadmap. It is not your boss. And so I make people, we're going to do that. Stablecoin was one where I don't know how it's going to play out. But that also answers my question is, what do we do about it? We're involved. We're building a stable coin. We may build it with other banks. We have a JP Morgan deposit coin already, which I can pay you interest on. We use the blockchain. Any of these tools that you want to use for smart contracts and stuff like that, we are simply going to do. I don't know how it's going to sort out, but I'd rather be plain, which keeps us smart, than acting like I know the answer to it. And so, and we do that with all technology. Whether, you know, sometimes regardless of what I think about it, I want you to be dabbling in it. Because you're being smart and it is much more important than saying Jamie does or doesn't like it and something like that. So, and we do that with almost all frontier type of technologies.
Pretty wild how they've all changed their tune now. They're talking about in a technological way, advancement and innovation in cryptocurrencies. And last up, Goldman Sachs says Fed will cut rates again in December and 2 more times in 2026, even as Powell pushes back. So here's what's going on. Goldman Sachs just dropped a new report saying the Federal Reserve will cut interest rates again in December with 2 more cuts coming in 2026, despite Fed Chair Jerome Powell sounding unusually cautious last week, saying another cut is far from a foregone conclusion. The weakness in jobs is real, and the Fed can't wait. Goldman's chief economist, David Mercel, says the labor market weakness is genuine and unlikely to improve before December. In simple words, the U.S. economy is slowing fast, inflation's basically back to 2%, and the Fed needs to act or risk deeper downturn. That's why Goldman expects a December rate cut and 2 more in early 2026. Target range is 3.25%, the lowest in years. The Fed already cut rates twice this year and plans to stop shrinking its $6.6 trillion balance sheet in December, meaning more liquidity is coming in. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.